My name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was my own original work, as I think you deserve to have that. So with that, Chicago wheat. The dominant pattern here since, once more remains the dark blue mid-February to mid-June bearish shift pitchfork, with the dark blue upper time currently at 555.5, specifically being tested in early and mid-November and withstanding the upside pressure. We also have a new possible pattern which I will detail shortly. The current base of action, if a little ragged, is the mauve medium moving average, currently 536.5, reinforced in the last 2 weeks by the green short medium moving average, currently at 537 even. Interestingly, the gold long moving average, currently at 544.25, which in early and mid-November did not play much of a role, now seems to have reverted to type and is trying to cap rises, much as it did in September. Now, I said 3 weeks ago, and I quote, and it's a long quote, they have heightened the idea of the August to October action being a possible, if somewhat wobbly, double bottom. Hence, I've laid out some potential targets above of a primary target X, up in the 582.75 area, and a secondary, harder to reach target X1, up in the 598.5 area. These, of course, depend on the market breaking the dark blue upper tone, which is no certain effort. So I'd keep an eye on the main pattern, which is the dark blue bearish shift pitchfork. End of quote. Well, the pullback from the dark blue upper tine and the reinvigorated capping of the gold long moving average are now threatening that whole idea. It was, as I said 2 weeks ago, and I quote, and it is a long also quote, I will for now still maintain these topside potential targets, though if we head much lower then I'll retire them, and this leads to the part where I allow what may cause the prices to move lower, and there are two things. Firstly, we're set up this week to make a possible weekly key reversal. If we close tonight either over 542.25 or under 541.5, so quite a narrow range. If we close outside those, we would have our weekly key reversal. Anything in between would have a lesser outside week. Right now we're looking just about at a weekly key reversal down. Secondly, the action itself between the last week of October to date looks like a possible small double top pattern. And we're on the verge of triggering it with moves below, if not closes yet, below the September 2020 low. These actions offers potentials, not targets yet, but potentials of a primary potential down in the 524.75 zone and a secondary harder to reach potential down in the 516.25 zone. These, of course, depend on confirmed consecutive closes below the September 2020 low, and that's the end of the quote. Now, there's a lot to unpack there, so let's first look at the weekly key reversal idea that happened. And we had a weekly key reversal down, which is all well and good. Next, have we a possible double top pattern from the last week of October to date? And we have confirmed closes below the September low? The answers are yes, and we have a possible double top, and yes, we have had confirmed closes below the September 2020 low. So why is it still a possible double top? Well, the reason why is that the market is forming a shelf or extension based around the combined mauve medium moving average and green short medium moving average, and so far delaying the triggering of the possible double top pattern. Now, I don't like delays, but this sometimes happens, especially if the market's trying to find a way not to trigger the move lower. Hence, these are still potential targets below for this pattern. But instead, I would lower the trigger point to confirm closes below the 535 zone for now. Chicago corn. The gold long moving average, which is currently at 439 even, this had previously done an excellent job in capping prices in late September, though not earlier in early mid-November, and again this week. It was acting more as a support and starting to act as a base of action. Above it is the 50% Fibonacci line for 2025 at 454 3/4, which was a seemingly formidable and resistance, as just above that was the bright red trend line, currently at 456.5 to the July 23 to January 24 descending triangle, which capped prices 3 weeks ago. I'd previously had my doubts about this trend line, despite how large the pattern to it related to, or once was, I should say. On the downside, we have the rising green short medium moving average, currently 440 3/4, which, despite an aberration 2 weeks ago, seems to be willing to act as a sort of support. Just below this is the November 2020 high at 439.5, but that doesn't look like much support to me. So we'll have to look all the way down to either the mauve medium moving average, which is currently at 429.25, or down to the important 50% absolute Fibonacci line at 425, and that led to the October low at 425.5. Any such possible move lower would be the one to watch, as it may well determine the future health of this market, to go even further down, or to hold, or even to retrace higher. Kansas City wheat. Okay, as I said 5 weeks ago now, we have a major issue here, and that's the end of the quote. The original driver of the market lower, the now retired February to March bearish shift pitchfork, had given way on the top side over to the newer bright green March to June bearish shift pitchfork, and this in turn had seen the bright green upper time, which is currently at 521.25, broken. But the market not letting go of the bright green upper time, something that is not unusual to see in such situations. And the market is using it as a base, sliding slowly down the top of it. Additionally, the flatlining medium moving average, currently 528, and now the flatlining green short medium moving average are seemingly now acting as attractors to the market, possibly with the addition of the 38.2% absolute Fibonacci line of 532.5. Additionally, we saw back at the start of November and also mid-November the combination of the March 24 low at 551 and especially declining gold long moving average above, which is currently at 542, capping any rises. The gold long moving average is still threatening to do that now, though at lower levels. This led to the following scenario similar to Chicago wheat of an August to October double bottom idea, with a primary target X up at 575.5 and a secondary hard to reach target up at 591 3/4. What is stopping this happening, apart from obviously the gold long moving average and the March 24 low? Is actually what's stopping it is further above, and that's the dark blue lower trend line to the November 23 to April 24 descending triangle, which is currently at 556 3/4, and the March 21 low at 559.5. And to be honest, neither of these are that good. So it comes down to the gold long moving average and what the market does to it. Now, it had been pierced before back in June, but prices spent only a short time above it. And it may happen this way again. But, as I said 3 weeks ago, and I quote, I'm hoping that if it does, then perhaps it would be enough to achieve the primary target X, end of quote. Well, since that commentary, we've also developed a possible late October today double top, which has seen prices start to slide down the bright green upper time, but not as yet really trigger and move lower. And nevertheless said 2 weeks ago, and I quote, this drop had been enough, even though they were not as yet confirmed, to indicate potentials below, short-term potentials that may affect the top side targets X and X1 above. But they would still require a close assessment of the market if these new ones are reached. Thus, we have a primary potential down in the 518 3/4 zone, a little under today's low back then, and a secondary harder to reach potential down in the 512 1/4 zone, just above the bright red unreconstructed 1999 to date uptrend, currently at 509. What we have seen since those comments is the development of a shelf or extension to the possible double top pattern. And this delaying the triggering of the possible double top pattern, that's actually possibly what it's doing. I don't like delays, but this sometimes happens, especially if a market is trying to find a way not to trigger the move lower. As there are still potential targets below for this immediate pattern. But But instead I would lower the trigger point now to confirm closes below the 520 zone for now. Now I know this doesn't help with the primary potential, as it could be argued that we already reached it with a low 2 weeks ago of 519.5 when compared to a primary potential of 518 3/4. But I'm looking at the whole pattern. For this, I think it deserves such a realignment, especially if these are the opportunities to even look at the whole recent action as a possible head and shoulders top, or even a small bear channel, such we have between September to October. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.